Kate wanted us to look at Harmony. And we know that this week, all the gold counters performed very well because of the gold price and the weaker rand. But it's, again, 40-week moving average, that line in the sand that Harmony is testing at the moment. And we can see every time it tested it, retraced, again, maybe moved above it, but came back. But that 40-week moving average was continuously the magnet where the share price pulled back to. So, Kate, if Harmony can keep 25.91 Rand into a support and change that level around 28.85 Rand into a support, and then again the level of around 31.41 into a support, where we can see higher levels on Harmony. This consolidation phase and these two resistance lines I've drawn in here comes back as far as May 2017. So it will be interesting to see whether it can find enough buyers to lift that share price above these levels. There's still a lot of upside on the Harmony graph if we look at the stochastic indicator, but then there needs to be some interest and some more buying power to lift the share price through these levels. When will my graph warn again? When the 40-week moving average on a weekly graph changes into a resistance, and especially here below 22.63 Rand, I would become a little bit more nervous about the Harmony share. I want to have a look at Amazon again, and we're going to continue to maybe track this share for Derek, and because it is interesting to see how a share develops and how a formation can come into play or give us false breaks. And we've previously mentioned that $1,959 should change into a support if we want the possible double top or lower high to be wiped off the table. And we can see that Amazon at the moment is fighting that 40-week moving average. If it starts to consolidate above it, we can take a sigh of relief and say, yes, there's enough buying power. Maybe Amazon would try to reach for higher levels again, and especially change that $1,959 into a support again. However, if the momentum to the bottom continues and the selling pressure remains and it starts to consolidate below that 40-week moving average, this possible double top or lower high would be confirmed when the level of $1,375 changes into a resistance. And that would be massive for Amazon, for we know that that can take this share back to about $1,000. Interesting graph that we're going to keep an eye on. The stochastic is clearly pointing downwards. We know that they represent a lot of the technology shares. It's a strong tech giant, but we can see that there's clearly a loss of momentum. A little bit of optimism is seen in this fact that there's a long lower shadow on this candle that tells me that there are buyers that nibbled in this share price despite all the negative news and the downside. And at the same time, I maybe want to have just a look at the Dow Jones, because we've seen it's been not only locally, it's been an interesting market, but overseas as well. And we can see that there is a strong bullish engulfing candle that are developing this week, just after last week's sell-off that we've seen. And we know, and we've mentioned it previously, that there might be a possible head and shoulder formation developing. And the reason why we said that is because it looks like there is a left shoulder. Let me just draw that in. A possible left shoulder, a head, and yes, found support, bounced a little bit, retraced, broke the possible neckline, but found support again. So if the share price, and this is what we call a false break, because we could say that, oh, the head and shoulder was confirmed when that neckline changed into a resistance, but hey, the share found enough support and it reached for higher levels. So if the share does not go and change this level of the left shoulder, and the reason why I'm choosing that one is because this is the highest level between the two shoulders. So if the share can change this level into a support and reach for higher levels, we can assume that the negativity and the pessimism around this formation is off the table. However, if the share can't find enough buyers to lift it above that 26,170 level and it finds some resistance and retrace again, then this neckline becomes very, very important again. Also take note how in 2018 there was resistance found at almost the same level as in September 2018 and again here in May 2019. But it just seems that the Dow Jones can't seem to get above that, and that is seen as negative. So then we talk about a possible triple top, and we know these are the formations that cannot be ignored, that should be taken account of, and we just cannot take away that 40-week moving average, the red line in the sand that tells me above it, the long-term sentiment towards the US market and towards this index remains positive. But as soon as the index starts to consolidate below it, the warning will be on the table. So the Dow Jones and the investors in the Dow Jones has got a lot of buying power. They need a lot of buying power to lift this index to higher levels and to maybe reach for a new record high. We can see that the stochastic is almost in oversold territory. It's sitting there on a 22. We would prefer it to be below a 20 or a 10. But look how interesting this shorter, the blue line, the shorter moving average, look like it wants to lift its head to higher levels, and that is seen as positive. So, and obviously we can understand that because of the bullish engulfing candle, which tells us that there were buyers that were interested and started to buy the market again. But that stochastic will only be positive and will only confirm optimism when that shorter blue line starts to break through my red moving average, the red line, the longer moving average on my stochastic. Only then will I have confirmation. But it looks like there is a divergence, and that 26,170 is a critical level to have a look at, because if the Dow Jones starts to lose momentum below that head and shoulder, that warning formation becomes part of our concern again. I want to have also look at, Cornelia wanted us to look at Bristol Myers and the biopharmaceutical company. Ticker on the New York Stock Exchange is BMY. We know that this sector, not only this share, but this whole sector had a lot of selling pressure, came under a lot of pressure. But there's a beautiful falling wedge formation that is developing at the moment. And we cannot ignore the fact that there's long shadows here. One, that tells us that the buyers are nibbling. And that the share has found here in the 22nd of April 2019, a higher level of support than it did here in the 31st of December. We can see bullish engulfing candles forming, but however, the confirmation of optimism will only be confirmed when the share price starts to consolidate above $48.62. Take note how closely that 40-week moving average is waiting at that upper line of the falling wedge, which tells me the importance of that resistance level. And think about it, this share at some stage in February 2018 traded around $70 and even as high in July 2016 at around $76. And this is a beautiful falling wedge formation that can be used to start to accumulate the share. This graph will only warn when $44.48 changes into a resistance again. Maybe a share that we can keep track of and see how it performs going forward. Jonathan wanted us to look at Lonmin. And we've previously mentioned that Lonmin had a bullish flag formation, and how's that possible with all the negative news and the decisions that needs to be made. But it's clear that when buyers start to nibble a share and the candles start to form, you cannot ignore the fact when resistance level changes into a support. And look how strongly that 40-week moving average found support there around 10 Rand 50, and the buying power just shot this share to the roof. And I mean, there's also a beautiful inverse head and shoulder possibly forming, but the strong next resistance that needs to be overcome is waiting there at 15 Rand 28 and around 16 Rand. But this is a beautiful graph. Obviously, the weaker rand is supporting the share price, the higher platinum price. And it will be interesting to see what the share does despite all the negative news. And we can see that technical analysis can be used to make decisions and to start to nibble on a share at the right time. When will this graph start to warn again? When this upper band of that bullish flag, waiting there around 12 Rand 72, changes into a resistance again. The first warning will be below 13 Rand 72 when that level changes into a resistance. I had an interesting question this week. Maybe for some of us, support and resistance sounds like a common term, but for new viewers, to make it simple, a resistance is nothing other than a roof. It's like a roof above your head. You just can't seem to break above it. So that is a roof above your head is nothing else than a resistance, and a support is the floor. It's the ground you walk on. It's the tile floor you walk on. It's something underneath the share price that supports it for higher levels. So if this roof changes into a support, in other words, becomes a floor, and you can start to consolidate, the share can start to consolidate above it, that beautiful inverse head and shoulder formation can reach, even take this share price to higher levels. Who would have thought that we would say anything positive about Lonmin despite all the negative news and etc. But this share is starting to look beautiful. Possible inverse head and shoulder, almost the same as what we saw in Sabania. We can see that there's still some nice room for upside on the stochastic indicator, but this level around 13 Rand 72 should remain a support. Feel free to send your questions through to admin@fransdeklerk.com for next week's show. Have a fabulous week. Cheers.